Now, the UK housing market is sputtering again, with economists predicting that the downturn has further to run, with data this week showing prices have resumed their decline.
The UK property market is in trouble and prices are going down, and I'm a firm believer we haven't seen the worst of it yet. However, if you're one of those people who believe prices will continue to go up in a straight line,
property won't go down,
I'm confident you may think differently after watching this video. Now, it's no secret 99% of us who predicted the pandemic to be the catalyst to see house prices fall have all been proven wrong. It was a unique era in all our times that will go down in history, and although it looks like the housing market survived during that pandemic, even growing somewhat in terms of house prices, in my opinion, it didn't solve the issues around housing here in the UK, and it was just another kick in the can down the road exercise by those in power. But if we dive into some of the data around the UK house prices, we can see some experts claiming that 10% price drops at a minimum could be expected in the very near future. Now, it's quite a bold statement to make during these particular months, as this is where demand generally tends to pick itself up. But things aren't the same this year as they have been in the past few. You see, recent figures from the Bank of England show borrowing of mortgage debt fell sharply in April, with consumers repaying £1.4 billion more than was taken out in new lending on the month. The bank stated that this was the lowest figure since 1993, excluding the pandemic. And when you combine this with Nationwide Building Society stating that house prices fell in May at an annual rate of 3.4%, which is the sharpest fall since 2009, my friends, it does make you raise your eyebrows and sit up in your chair. Now, a lot of this has stemmed from the aggressive round of interest rate rises in the last decade due to attempts to combat inflation, and even though many predicted things to level out perhaps towards the end of this year, there's still no certainty around where they will end up, with many, even including myself, not ruling out the possibility they could rise even further.
That's why traders are now pricing a peak rate of 5.5%, which is above the danger level that the Bank of England identified for mortgage distress. Debt distress for mortgage borrowers, and that's just looking to the future. You've still got previous hikes yet to feed through. It's the next few quarters where you'll see the worst pain for the housing market.
So as a result of this, we are seeing net mortgage approvals for house prices falling quite considerably. And if we look between March and April of 2023, we actually saw figures fall by £51,500. I've also shared some shocking statistics around how much landlords are struggling with repossessions and repayments on their mortgages, along with those with residential homes now coming up towards their refinance terms as their fixed mortgages are ending. And it's fair to say that everyone's overall costs have increased ridiculously since Liz Truss made her own mess last year. Now, with that being said, however, a full-blown property crash like we saw in the early 1990s, you could say is still unlikely. With net migration standing at more than 600,000 last year, the demand argument still has some relevance. However, the effects of the recession I believe we are in is definitely deeper than most believe, and I still feel it's yet to really play its hand, and we are therefore yet to experience the full extent of the pain just yet. And therefore, I guess the 10% nominal house price fall predicted is quite a sensible one. Side note, as mentioned a few times, this is an average. Every area reacts differently, so don't be surprised to see yours doing well or worse, depending of course where you're based. However, one thing everyone can take advantage of despite their geographical location is today's video sponsor, which has just been nominated as a finalist for a vegan and organic brand, Health Excel. Now, I'll keep this short as loyal subscribers of the channel already know about this, and there are more details in the description. But any support is always welcome, my friends, and my promise to you is it will improve your mental and physical well-being. So back to some data. Property prices in top cities around the world have dropped for the first time in 14 years. In the UK, we have seen typical property prices fall by £7,000 since last summer, where the peak was £286,896. And although the increase was far more significant than this over the last few years, we should still maybe err on the side of caution, because even Halifax have reported house prices dropping in May by £3,000 when compared with last year, stating that confidence levels are now being hit. And if we jump over to rival lender Nationwide, they have recorded a steeper fall in house prices according to their own data, where they saw a 3.4% decline in May, which makes it the biggest decline again in 14 years. So further downward pressure on house prices is expected by most lenders, and even myself. Now friends, I know what you're thinking. Not enough houses are being built, demand is high, net migration isn't slowing down, and the general public still want to own a house. And I'm not disputing that those are relevant factors, but just as they should be listened to, things like the recession, the cost of living, interest rates, etc. are just as important factors to consider on the other side of the scale, which leads me to ponder the question, What would actually cause the housing market to crash? Well, let's have a quick look into this. We know that the ONS has some of the most comprehensive house price data and does seem to correlate pretty well with Nationwide and Halifax. They've actually shown house prices rose by an average of 4.1% in the 12 months to March. So small dips in recent months may seem less significant if of course you're one of those people looking at it on a year-by-year basis. However, confidence remains an interesting talking point, and we can't ignore the matter of rents too, which have increased again. I have seen this with my own tenancy and also with the rents we've achieved on our new build projects within the past 6 months alone. And if we look across the UK, the average rise in rents in the last 12 months is just under 5%, standing in at 4.8%. But some of the higher ones is 5% in London and Yorkshire and the Humber, and 5.2% in Scotland. And in case anyone is watching from Northern Ireland, firstly, welcome. And secondly, it was reported at 9.8% increase there. Ouch. So again, uncertainty in terms of really knowing what will be the straw that breaks the camel's back is still unknown. Is this also a time where banks will continue their target-driven goals to accumulate thousands of properties that sit on the market and aren't being picked up by the general public because they can't afford them, or even because landlords are selling them? Again, a reasonable possibility. But if borrowing and consumer confidence does not pick up anytime soon, and we continue to see a trend of prices slowly being reduced and less people taking on mortgages, then the real downward spiral could start. Now, just to add before I get potentially slated in the comments, we must look at overseas investors who are investing in the UK property space by the thousands. And it's definitely an important factor that we must consider. And I've touched on this in previous videos and the extent to which they do invest. And then if we throw in the banks, you could argue that the rich will continue to just buy assets. And friends, I don't discount that for any moment. But I also tend to believe that savvy investors usually wait for blood in the streets and investment property is at a discount. Because after all, you truly make your money when you actually buy your property.